You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo, a.k.a. your host, your guide for this volatility journey, a.k.a. the guy who single-handedly collapsed the ball in Denison Mines. You know what the hell I'm talking about. Check out our option block from yesterday. A few calls we're trading at, let's say, some inflated volatility levels out there. Of course, reminding you, if you like what you hear at this show, anything we do here on the network throughout the week, usually we're coming at you a couple of times a day out here. Make sure you keep rating and reviewing. It does help the new folks. We see a lot of them coming in these days. It does help them have a lighthouse, a safe harbor in these troubled waters. So wherever you get this, it could be anywhere. It's on pretty much every platform on the planet these days. So wherever you get it, keep rating and reviewing. It really does help. Keep sending those questions and comments in too. We do love to hear from you guys. Let's see who we're hearing from today. First, let's go out to the Matrix hot seat where he's holding it down far out on the far-flung shores of Maine. It's dark. It's stormy. It's always overcast, always dreary. He's in the GIOVINAZZI compound, perched there on the cliffs, hanging over the shores as the lightning crashes down. That's where we find the rock lobster himself, Mr. Andrew GIOVINAZZI, from OptionPit.com, by way of Carmen Line Capital, by way of a Robinhood trading thing near you. Mr. Rock Lobster, welcome back to the program, sir.
Hey, it's good to be here. I'm just sitting here watching a strangle I bought just decay away, and I'm just about to blow it out. So
isn't that a good feeling? Just watching it just decay to nothing just feels good, doesn't it?
it's so ridiculously cheap, but it like, all right. And then but I'm like, okay, well, we're not moving, so I give up. That's it.
All that's missing is that if you were still on the floor of the SIBO, you could go drown your sorrows at Ceres with a massively overpowering well drink of your choice. But other than that,
you mean the see-throughs?
Yeah, exactly. Other than that, you're living the same life, just without the absurd vodka tonics and everything else that they had going over there. If you don't know what I'm talking about, you obviously never traded on the SIBO back in the day. And also joining us here, holding down the MIAX hot seat, old friend, Mr. Jim Carroll, the Senior Vice President and Portfolio Manager over there at TOROSO Advisors, joining us here for the first time in the year that is so far quiet and calm and tranquil, 2021. Jim, welcome back to Volatility View, sir. How's your new year going so far?
Oh, it's fantastic. My son and his girlfriend came down with the virus, but they're fine and dandy. Everybody else is doing well, and just trying to figure out how 2021 could possibly top 2020.
Yeah, well, so far we're on a good course for it. So let's see if we can break it all down. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review, the portion of the show where we do just that. We review the week that was and still is from a vol trading and trending and analysis and unusual activity perspective. And coming into the end of the week here, most of the major indices slightly in the green. Not all, though. Dow's playing the laggard. It's being the spoil sport today, off about 0.15%. So not a huge day, really, in any direction. S&P up a little bit more than 0.1%. NASDAQ up about 0.15%. So it's sticking his tongue out at Dow and saying, I can do that in the other direction. That's really about all we got going on from a major index perspective. A whole bunch of really kind of shrugging the shoulders out there, especially when compared to what we've seen out there in recent sessions where the markets really got to move, really got to go. Today, not so much. Coming into showtime, we saw spikes a little bit north of the 21 handle, about 21.1, puts it down a little more than half a point from last week. VIX cash, Mr. Rock Lobster, you're like this below your much beloved, much watched 21 handle, 20 3/4 coming into showtime, puts it down a whopping 1/4 point from this time last week. So giving up a little bit of that ghost, not much. We'll see if it can continue to do so throughout the course of the show. And our old friend VVIX ticking back up to about 121 again, up about 13.5 handles from this time last week, showing vol moving a bit again, which is always interesting out there. Let's go back around the horn. Let's start with our guest out there in MIAX land, Mr. Jim. Jim, it's been a while since you've been on the show. Obviously, a lot has happened in the broad markets and indeed in the volatility space. So catch us up very briefly if you have any thoughts on the madness that has so far unfolded in 2021, A, and then B, what's lighting up your tape on the vol front this week, sir?
Yeah, so, obviously the equity markets in general, the trend line has been directly north, and I think everybody in the vol space is just kind of staring at the VIX. It would seem all systems are go, but it just hasn't done it yet. Who knows? Maybe we're in front of a 3-day weekend. Could this be the day? We will find out. The thing that I keep looking at is the term structure and how elevated it is in general and how flat it is from April to September. I'm also keeping my eye on some very significant inflows to the long volatility exchange traded products, specifically VXX and UVXY, that have been bulking up very substantially since the start of the new year. And we can talk about that a little more if you want.
Yeah, we'll get to all of that latter stuff in a little bit, but are you with the Rock Lobster? Have you had your eyes perched, your gaze focused on that 21 strike in VIX for some time now? Have you too been flummoxed as it has bounced off it repeatedly, almost sticking its tongue out at the Rock Lobster as it did it every time there, Jim? Have you been part of that group watching that 21 strike too?
Absolutely. It won't crack. The Maginot line has been established.
It has indeed. I think the Rock Lobster established this when he was going on about it so much about how the 21 strike cannot be broken. Mr. Rock Lobster, you're like this. I was going to tease you with this by saying, hey, I went out there just to kind of mock you and picked up some longer term VIX 21 puts. I was just going to kind of throw them in your face a little bit, but it turns out they're actually working out pretty well so far right now. So there you go. Maybe that's the key. I just needed to pile in there and crush some vol for you there as well. Interesting stuff afoot, Mr. Rocklops. I know you've been glued, and your alter ego vol man have been glued to this 21 strike for some time. Obviously, the cash getting down there. The future's a bit of a different story. We'll get to that in a second. But what's been lighting up your tape there, and what are your thoughts? Maybe the 21 puts finally coming home to rooster. Didn't happen this week with settlement, but who knows? Perhaps the long weekend will be the key, sir.
Yeah. I mean, maybe. I just we went over some vol. Like, vol for next week is 13% at the money. Even they got the weekend in 13%. It's nothing, And VIX is 21. So there's like, I guess from the liquidity provider point of view, like, you don't have, there's plenty of short-term juice to be had. So I don't think there's like a gamma issue, but there's no sellers of back month vol. For whatever reason, we discussed, upside, a lot of upside volume keeps getting lifted, just the Robinhood, a lot of the just individual traders are coming to the market big and buying calls, and that just takes the vol out of the market or takes the contracts out. I think at least right now, 3,900 looks like a pretty tough spot. I just figured, hey, we'll just go to 4,000 in a week, but we kind of ran out of gas. I think part of the reason too is, you're not seeing, I think Amazon, it's not the highs it was in September. Apple, still pretty lofty, but not those new highs. So I think the stocks that have been driving the market, the Q stocks, really, they just run out of a little gas is all I could think of as of right now. But from a vol point of view, I agree with Jim on there's a pretty flat curve in the back, which is not, that's reflective of stuff going on in the SPX, and the vol structure there. So it's still, there's still a bit out there. But all the short-term stuff is just very, 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 very low. So, I still have some of my 21 puts, although I did take some profits on. I couldn't believe I actually got to sell them for something today. So I did take some profits. So for all of you listeners out there, since I did take some profits, that pretty much guarantees we'll see a sub 20.
I was just going to say, I was about to take some off myself. Now that you said that, I might hold on to them for a little bit.
I hold on to them because I took off 2/3 of them this time because I actually made some money on them.
That's it. We're hitting 16 next week. There we go.
You know what? And 16 would be fine. So I'm leaving. Although what I did is I did take some profits in Feb and I doubled my positions in March. So I'm looking for a little bit of a lower settle down in March as well. So we'll see what happens. But at some point, you got 3 days to go. I mean, how excited you want to go with 3 days to go when you have some of these positions? But yeah, if we do get a sub 20 settle or something like that, it'll still be happy days. But as far as how the market, is moving, I mean, the reality is we're starting to get the, SPX isn't moving very much. Although, man, it doesn't take much for it to fall apart. And I still think that's a symptom of the back month vol is just not there. Or there's not, I think there's still some short contracts out there, considerable amount. So we'll see. But that's another thing I will notice vol-wise, and I don't know if we're going to hit it at some point if we hit the vol of commodities. But look at the volatility in the oil complex. Somehow, some way, oil is back to where it was before the pandemic, and the vol is dirt cheap again. So that's something for people to consider as they're trying to troll around looking for cheap vol somewhere.
Yeah, you're right. Oil vol has been one to watch. Check out our TWIFO program this week in futures options program, listeners, every Thursday. If you're inclined into that category, the energy complex makes it on the show, let's say once or twice, or usually every week. There's enough going on. The vol out there got absurd town, I think is a technical term for a while there. It's not quite as juicy as it used to be, but it's fascinating to watch the ebb and flow of volatility out there. We've had the Once and Future Dr. VVIX on that show and others, and we've discussed many times how oil is much more of a volatility trading product than you might think. Everyone, obviously VIX is the one everyone goes to and spikes and things like that because those are the straight equity index volatility. But there's a lot more vol going on, a lot more movement, a lot more vol in a product like oil than you might think. So if you're interested, like the Rock Lobster said, looking at products that also exhibit some volatility and certainly some movement and also have a pretty deep book of liquidity available out there, WTI, I mean, you can do worse than looking out there. Let's look at now ahead. Speaking of all things futures and futures options, let's go out to the futures in VIX land. As Jim was mentioning earlier, this VIX futures term structure is something we've been talking about for a while. It's kind of been in this weird plateau shape for some time, and it's kind of hanging out there. We saw the front portion of the curve that was kind of juicy not too long ago on the show. That's kind of gone away. So no longer backward. Coming into the show here, we've got that Feb future about a little more than 1.5 points premium to the cash. That's pretty much cut in half from what it was last week because the cash was going crazy last week. And also, Feb, not long for the world. March on the board here as well. March is about almost 6 points premium to the cash. That's about 0.5 point juicier than it was this time last week. So it's kind of staying roughly in the same range, a little bit juicier out there in March. But Jim, the interesting part, the part we've been talking about for a while, is not kind of the weird front portion of the curve. It's more of this kind of plateau shape we've had in the middle there for a while. And we still have that. Once you get beyond the April future out there in VIX land, we kind of have it. It just kind of locks around 29.25 going all the way out to August and even kind of beyond there for a bit. So it's a strange shape, not one we've seen very often, but it's been hanging out there for a while, this funky plateau. Jim, I know this is something you guys watch over there as well. What are your thoughts on this somewhat weird, aberrant shape we've seen for a while now out there in the VIX futures? Doesn't seem like it's going anywhere anytime soon, Jim.
No, it doesn't. And it is it is odd, right? We've got a front month with a 22 handle, and then you go to April and you got a 28 handle. One of the ways I monitor that is actually using the SIBO term structure, looking at the difference between 6-month VIX and VIX itself. And right now, as we speak, that spread is 9 points, which is very, very wide. So somebody is saying, okay, we're fine this week. Maybe we're fine next week, but I'm holding my breath, going out a few months from now. If you want to buy insurance from me, you're going to have to pay up. That 9 point spread between VIX and VIX 6 month is at the 99th percentile of historic values. So, we've got vaccines, we've got Democrats who are going to pass, fiscal spending, and everything's going to be hunky dory. But the VIX term structure says not so fast. So somebody out there is bidding for portfolio insurance.
Yeah, you're right. You're looking at this, and this term structure does not speak of all the things you just mentioned. Does not speak of a good vaccine rollout, of the continued strong rallies of these markets. It definitely speaks to a little bit more uncertainty going forward, particularly once you get out beyond a couple of months out here. And it's been that way for a while. It kind of just locked up there at this level. I mean, looking right now, you can do like the June, July roll and get like a credit. We're at weird spots here, just ever so slightly. Or do it for pretty much even money, it seems like. Yeah, it's strange things afoot out here. Mr. Rock Lobster, this has been a talking point of ours for some time. As I mentioned, the gym doesn't seem like that's going away anytime soon. What are your thoughts on this ever bizarre, ever aberrant VIX futures term structure, sir?
It's hard because if you're looking at the actual credit numbers on this, from if you look at it and compare to like August, September, when we had that massive that big vol spike because of the SoftBank buying every option in sight. It looks like kind of eerily similar. If you just look at that early August, that mid August curve, and look at the curve now, and it's not it's pretty similar. Like the VIX level, the future premium, there is just there is a whole lot of buying in the back end, and we did have a bit of a sell off, right? What was that, 15 or 20% for tech? And it would not surprise me to see it go, that happen again. So I don't know what it will take to do that, but if you look at it, just, go to like VIX Central or something and look at early August, September, and look at now, and you're like, wow, that's kind of, that looks eerily familiar to what we just had going on. So, I would just caution people to, you get used to the market going straight up and all this kind of stuff. And you've had, I think there's been a lot of crazy speculation, but, and I think part of that is stuck in that part of the curve. So it'll be interesting to see how that ends up playing out.
Yeah, I would also just add, Mark, that I hear a lot of people, especially on Twitter, where I tend to hang out, talking about the contango that has returned to the volatility complex. And sure enough, if you look at spot versus the front 2 months, you've got some good old contango, but we're at a level where, that is suspect, as Andrew suggested. And you need look no further back than what happened on January the 27th, where we had a bad day for the S&P and VIX blew up. So it seems to me that players are just a little nervous. They got their fingers on the trigger, and they're scrambling at the first sight of any real weakness in the equity market.
That's right, that we have talked about before. It does seem like there's maybe a little bit of overreaction to the upside whenever we have any little move. I guess it's kind of hard to blame them. They've been just indoctrinated with this. If it's a day that ends in Y, the markets have to rally outside of last March. That's pretty much what we've seen just about every day for the better part of the past year. So you get a little bit of sell-off, and people are not used to it. They haven't been slapped in the face in a while, so it stings, it hurts, and they overreact a bit. To the upside. Let's see what's going on. Maybe some overreaction, maybe some sensible reactions going on out there in the world of volatility products. Let's start on the spikes options front. Remember, listener, the position that's been dominating things out there for a while was this 32.5 40 vertical against the 29 puts, all going out next week on the 17th of February. Looks like the trader came in and pared that one back a little bit this week. He took off, looks like about 1,000 or so of these Feb 32 halves and about 1,000 of the Feb 40 calls. So he took out 500 of each, looks like, on these bad boys. So yeah, interesting stuff out there. Obviously, kind of hard to fault him. That 32 half vertical, we've been saying for a while, market looks, the VIX 21 puts looking pretty good right now. 32F vertical seems a little bit bridge too far, perhaps. Definitely with this long weekend and this going off on the 17th. So he decided to not take all of it off, take about half of it off. He left the meaty puts on though, so maybe that's an indicator for you. Still 1,000 of those bad boys open out there. Going on out to VIX land. Let's see what's lighting it up out there. Spoiler alert, doing some paper out there today. It's pretty much been doing a lot of paper all week long. When the show kicked off, we had done just a tick north of 600,000 contracts. As of right now, that's up to 821,000 contracts out there in VIX land. So VIX has been lighting it up of late this week. Almost every day this week was at or north of the ADV out there. So that's probably why we're seeing that ADV staying firm and actually ticking up. It's up to about 667,000 contracts right now. That puts it up about 13,000 contracts from our last show last week. Let's break down the top 10 hot, sizable positions out there. And these are all Feb 17, most of them anyway. So a lot of these are going to be going the way of the dodo pretty soon. Interesting to see how this top 10 looks next week. Right now, a lot of paper open. 9.5 million contracts open out there. About 4.7 million on the calls and about 4.9 million or so on the puts out there. It's actually about 9.6 million. So yeah, let's see. It's possibly about 158,000 contracts to break into the top 10 in VIX land. That gets you all the way to, there's only 2 calls in the top 10 this week, listeners. So that gets you to one of them. That gets you to the Feb doubles. Remember, we talked about this before, this funky Feb double 60 thing that's been out there for a while. It's still there to the tune of 158,000, at least on the double calls. Number 9, 161,000 of the April, the first and only April in our top 10. April 20 puts. Number 8, 178,000 of the Feb 18 puts. We're talking, forget 21, we're talking 18s here. Number 7, 182,000 of the Feb 17 puts. Number 6, 197,000 of the March 17 puts. Number 5, 206,000 of the March 21 puts. Number 4, 208,000 of the Feb 15 puts. Number 3, 222,000 of the Feb 20 puts. Number 2, the other half of that interesting vertical, the Feb 60s, 237,000 open there. That means number 1 with a bullet, 335,000 of the Rock Lobster's favorite contract, the Feb 21 put out there. Looks like another 16,000 being opened just in the last day or so. So folks liking themselves. A little bit of that 21 put. Mr. Rock Lobster, what are your thoughts here on your favorite contract dominating the tape and anything else that's catching your eye out here in terms of VIX options this week, sir?
It doesn't surprise me because, like, the risk reward on this is crazy. It especially was crazy when it was still 20 cents up until yesterday. I think you could have bought all you wanted for 20 cents. So I had to just hold myself back from buying more. But anyway, it is what I would say noticeable that, you know, a lot of open interest. Now you're starting to see some March puts, March 21s, 17s, stuff like that, where, hey, people are starting to look past this. I mean, the reality is, you know, if not much happens, it's going to be hard for VIX to, you know, the vol eventually will start to come down. One thing we haven't had is I don't think we've had just really big willing sellers of options yet. And if that ever actually does come in, I'm not quite sure where they are with all these stimulus packages. They just keep getting bigger and more grandiose. But that probably might put the nail in the coffin. I don't know if anything's been signed yet. It's hard to keep up with Washington, I have to be honest with you. But yeah, look at, you know, when you see 10, you have 10 series and only 2 are calls. You know, that's a pretty big opinion as far as where everybody thinks VIX is going for the next month.
Mr. Jim, what are your thoughts here on the interesting amount of paper that's still open and the fact that the number 1 with a bullet, still the Rock Lobster's favorite strike out there, the VIX 21 puts? You know, we've debated before, I think even the Meatball, maybe talking up a little bit of his book out here, but he was thinking maybe the size amount of open contracts on that 21 strike could suck VIX and indeed the futures down, get kind of almost the reverse gamma squeeze that we were talking about in names like a GameStop. Instead, in VIX, it's going to suck it down shy of that 21 handle. What are your thoughts on that, sir?
There we go. The reverse gamma squeeze. Look, it clearly feels like the bet to be made, right? Where's the bad news? Where's the catalyst for the stock market to sell off and for, you know, VIX to head back up toward 30? It just doesn't feel like there is a catalyst. And yet, you know, we still just haven't been able to crack this thing open. So it makes sense. And, you know, we've seen a little bit of activity nibbling in the VXX and UVXY puts as well, right? Saw some put spread action in UVXY, which has the additional benefit of just being a structure that is designed to deteriorate in value. So, although it also tends to have higher implied vols associated with it, but you know, the bets to the downside have made sense.
They certainly do, and they certainly seem to be working out right now. Are you playing on the Rock Lobster's favorite strike? How many of those? 335. How many of those are in the Rock Lobster's hot little hands? I guess we'll have to find out. He took some off, he said, today, which again, if there's ever a sign that you want to get in, listeners, maybe that is indeed it. A lot of paper, though, like I said, lighting it up out there today. 821,000 contracts up there in VIX land. It makes it so far already the most active day of the week. The big, most active contract out there today, going out to May. The May 23 puts, that's interesting. Maybe keeping the fade party alive all the way out to May. 75,001 of those bad boys lit it up this week, followed by almost 50,000, 49,000 and change of the Feb 20 puts, 48,000 of the March 22 puts, 44,000 of the March 19 puts. I see a bit of a trend here. And 31,500 back out to May of the May 21 puts. So maybe a bit of a ratio, 21, 23 put spread out there. Either way, all puts all the time. And for size out there today, listeners, yesterday was a similar story for a little bit less size. 607,000 contracts on the VIX tape last week. Yet again, exact same 75,001 again of the May 23 puts going up yesterday, which is interesting, surprising. Maybe someone got in and got out of Dodge. Someone decided they wanted to do. I want to be the guy who got the one lot there both times. That's pretty funny. Must have been something lurking in the book, probably. 48,000 of the March 22 puts for number 2, 43,000 of the March 19 puts for number 3, 30,000 even of the March 21 puts, and 30,000 even of the March 27 puts round out our top 5 there. So folks playing out there in May, which is kind of interesting, especially given what we set out there with that structure of those futures looking a little bit richer, a little bit juicier past April. May is going to take quite a lot to come in. Maybe that's why they're going up to 27 all the way out there. Wednesday, 691,000 contracts, the most active contract, 50,088 of the March 19 puts, followed by 49,000 and change of the March 26 puts, 39,000 of the Feb 21 puts, 21,000 of the March 30 calls, our first call in a while there, and 20,000 of the Feb 22 puts. Tuesday, the second most active day of the week, 747,000 contracts on the tape. The big dog that day, 90,500 of the April 20 puts, followed by about 86,600 of the April double calls. Maybe a funky risk reversal? That's an interesting one. I'll have to dig into that one a little bit. 20 double. If that's the case, listeners, what are your thoughts on that one? Either way, the double calls in April, an interesting choice. Number 3, 46,000 of the Feb 21 puts. Number 4, 45, almost 46,000 of the Feb 32 halves. And number 5 here, 35,000 of the March 21 puts. Let me get to Monday. Monday was the laggard of the bunch, only 436,000 contracts on the tape. The most active contract, March 22 puts, 33,700, followed by, well, much less, 9,600 of the Feb 20 puts, 8,000 of the Feb 37 halves, 8,000 as well of the March 27 puts, and 7,000 of the Feb 23 puts. So a much quieter day out there on Monday. But interesting stuff afoot here, Jim. Some interesting strikes. I want to look into this 20 double maybe as well. That's an interesting one. What are your thoughts on any of these prints, or maybe aside of these, did any other prints go up in VIX options this week that really came across your radar and made you go, Jim?
No, I can't say that anything really made me go, I'm kind of trying to keep an eye on puts versus calls and which way the mob might be headed. Clearly looks like the wagering is for a lower VIX.
It certainly does seem as if that is where the mentality is headed. I'm going to see if I can just dig up these puts here really quickly. Well, the calls, the April doubles, they sold 79,775 of those for $1.21. Looks like that was against 79,775 of the April 20 puts, and they did a lot of the April 20 puts, obviously, that day as well. There's multiple legs to this. I'll need to dig into this a little bit more, but it does look like it went up at the same time as the 20 puts. So a 20 double risk reversal / strangle. They got $1.21 for those April double calls. So it's not nothing that they're selling out there, if that is indeed the case. But let's move on to the product I know has been on Jim's radar and a lot of your radar for a while here. This is VXX, getting a little bit of erosion back in again, almost half a point, about 0.4 of a point this week. Coming into Showtime was about 16.10 or so. So nice little bit of juice. You get a little bit tight spreads out there this week. They probably worked out pretty well. About 198,000 contracts were on the tape coming into Showtime. Let's see if that has juiced up a little bit. So yeah, a lot more now. Actually, about 280,000 contracts on the tape. The ADV also ticking up out there, 339,000. That's about close to where it was this time last week. So it's still frothy out there in terms of action. 339,000 contracts. That's a pretty rich ADV for all things VXX. Before I get to the top positions, Jim, and what's been trading out there today, I know this is one you've been watching in terms of inflows here. What's been lighting up your tape from a folks gobbling up VXX of late, sir?
Well, so, one of the things I keep track of is just the AUM of the VIX ETPs, the big ones being VXX and UVXY, the single long and the 1.5 long. And what's most interesting to me is since the beginning of the year, assets in VXX have grown from, call it 924 million to 1.3 billion. So they're up about 41%. While the market has been trudging higher. And not to be outdone, UVXY has gone from roughly $1.4 billion to 2.5 billion. So it's up 84%. And these are long vol bets. Now, clearly one of the things that happens in this little ecosystem is people short these things as a way to be short volatility. So it's hard to know how much of the stuff that's been created is people out there shorting the long ETPs to get short exposure. But just the magnitude of the increase is very interesting to me. There's clearly some big appetite. This is not just Wall Street Bets, the Reddit crowd, the Robinhood crowd slinging volatility. There's some size here that goes way beyond what they're capable of doing.
They're not trying to work the squeeze in your favorite ETPs, sir?
Well, that's been a topic of conversation, and in theory, you shouldn't be able to do that. But if you did believe that a big chunk of the UVXY that's been created was created to short, then maybe there is a little reaction function in there someplace. Really hard to decipher how much of a short interest there is in these ETPs for a whole host of reasons. But it's interesting to me that in an environment where you would believe the play is to be short vol rather than long vol, these guys have taken in a lot of assets. The other thing that's been weird with these is structurally, VXX and UVXY are designed to go to zero. And so when the S&P is trending higher, they're typically, when S&P is making new highs, they're making new lows. And it hasn't really been the case that has happened in the last couple of months. They've really kind of been flat, not unlike the VIX. They have just kind of hit a place where they refuse to go much lower. And that's been interesting to watch too. I mean, part of that is, again, a function of the term structure, that as the front month rolls down, there's less of the front month in the VXX and UVXY. And so they're basically just rebalancing every day out the curve to higher levels.
Yeah, that's a fascinating topic. Not one we get into all the time here on the show is the fund flows. It's only an hour show at the end of the day. It's hard to squeeze everything in. Mr. Rocklobs, is something you've been watching of late as well, these pretty sizable inflows into products, your favorite products, like VXX and UVXY, sir?
I don't really watch the inflows. Actually, I don't have to. I just follow Jim on Twitter, and he says, hey, look at all these AUM is blown up in these products. So I kind of lean on people on Twitter that I like that has that kind of information. But if you think about it, if people are leaning into these products, what are those products buying? They're buying futures. And part of the game, like we have a theoretical value for where the VIX curve should be, or just historically, and it's kind of, I use it as a rough, just as a rough gauge. right? So when you have this much premium over parity when VIX is 22, it's a lot different than when you have this much premium over parity when VIX is 12. Like the dynamics are a lot different. And right now, like if they're piling into these, I think, people are looking for the vol to blow up again because it's been doing it every, pretty religiously every month, at least once, sometimes twice, since this COVID thing started. So I can see how they're piling in, right? And when they pile in, those products have to buy more futures, and it's, a little bit self-perpetuating. There's no XIV anymore now to provide liquidity and sell those futures back to VXX. So I think we're also seeing a little bit of that. The SVXY, I think, has basically had its knees. It's been kneecapped pretty effectively as far as what it can do. So there's not a natural seller of premium anymore. And then you add to this, okay, if index traders can't buy, if people keep buying puts in the index, just keep the puts and stock position going. Like where does that take the vol, or where are they going to hedge or buy something? They're going to go to the future. So you're going to, future traders, nobody's getting in the way of this. They're just going to let it keep rising. And I think that's what we have. We have a pretty just continue build up in these products. Maybe they do think they can like squeeze the vol market. But I'll tell you what, it's hard to squeeze the vol market when there's not a huge short product out there, because they'll just keep taking it up. They don't have any problem with that. So, but if we don't get a move, then that stuff is going to just collapse under its own weight. So it's a little bit difference of a mechanism. There's no forced buy-in with VIX futures. So there's a lot of different mechanism in the vol complex than there is in just a regular, like a GME Squeezy McSqueezenstein type of situation. So I do think, but I just trade it the same way. I see that premium as just one more premium to sell, and I almost do it always with a strangle, with a long strangle trade. And historically, it's worked out very well for me, and I'm going to keep doing it. And but you don't know what you're going to get out of it. Sometimes you get something great. Sometimes it's kind of a stinker and not much happens. But I'll keep doing the same thing. So I'm looking at puts in March again. I already put a bunch on. I'm like, so I'll just, I'll probably keep doing it. And it doesn't take much to make it pay. But I think, if they think they can squeeze VXX if I just keep buying it, I think they might end up with a, kind of a dud. But we'll see what happens. I mean, the market could always sell off at any time, and I think that's what they're betting on. But, every day that goes by and it doesn't, it makes it a little bit tougher to hold those products.
That is the case indeed. Let's look out here to the top 10 sizable positions out there in VXX land outside of the fund flows. Let's see what's lighting up in the options. Cost you 22,000, I should say, contracts to break into the top 10 in VXX land. I get you to the March 16s. By the way, there are about 4 calls in the top 10 this week. So you're talking 60-40 puts to calls. Not all puts all the time. It was hard to find a call out here for a while. Number 9, 22,800 of the Feb 16 puts. Number 8, back to the calls, 23,000 of the Feb 20 calls. Number 7, 25,700 of the March 30s. Number 6, 26, almost 27,000 of the Feb 14 puts. Number 5, 33, almost 34,000 of the March 14 puts. Number 4, 38,000 of the March 15 puts. Number 3, about 39,000 of the March 16 puts. Number 2, 47,000 of the Feb 16 puts. Number 1 with the bullet out there, still on the call front. It's the March 20 calls, 85,000. More of those have piled in since our last show. So someone out there keeping an eye on that 20 strike and got size, 85,000 contracts open out there. In terms of what's trading out there today, the most active contract are the Feb 16 halves going out today. So it looks like some puts, probably a little bit of closing action, about 12,000 of those bad boys out there. Those are in the money right now, followed by about 10,000 and change of the June 14 puts. First June I've seen in a while. 10,000 is number 3 of the Feb 16 puts. Number 4, about 10,000 of the Feb 16 puts as well, going out today, expiring on the 12th. And round out the top 5 here. Also expiring today, the Feb 16 half calls, about 7,500 of those bad boys. So go out here, UVXY really quickly as well. Don't really break it down too often here on the show, but since Jim's on, he likes to watch all these ETPs. We'll make an exception for him. It's about 9.75 coming into showtime. Puts it down about 1/4 point from last show. It's not a huge move net show to show out there, even though it is doing some paper. That ADV has ticked up to about 328,000. Puts it up about 14,000 from where it was this time just last week. And today so far, about 303,000 contracts on the tape out there in UVXY land. Most active contracts today, 25,000 of the Feb 10 calls going out today. So go figure. Those are pretty much right around at the money, followed by 20,000, almost 21,000 of the Feb 10 calls going out next week. So the 19th, 20,000 of the 10.5 calls going out today, and 16,000 of the 9.5 calls going out today, and about 12,000 of the 9 calls going out next week. In terms of the top positions, let's just do a top 5 here really quickly. Number 5, 31, almost 32,000 of the Feb 10 puts, 35, almost 36,000 of the Feb 10 calls. Back to number 3, 36,000 of the June 5 calls. Number 2, 36,061 of the Feb 10.5 calls. And number 1 out here, 38,000 of the March 10 calls. Jim, I know you watched UVXY as well. What are your thoughts on the inflows out there, as well as what we're seeing from an options perspective out there, sir?
Well, yeah, it's interesting. I have a little back channel to some folks who are, betting on the next explosion. And I'm looking at the activity today, which leans heavily toward the call side. And I'm wondering if it's some of my peeps writing calls against their long UVXY as a way to try to bleed a little less. Hard to put all the pieces together, impossible to put all the pieces together, but that's definitely one way to look at it.
Even Bloomberg's talking about UVXY now. So it's getting out there. They had a piece just a little while ago talking about, they said the world's biggest volatility ETF grows 40% in just 4 days, talking about how it had about 2.2 billion in assets. I believe this was yesterday, up from 1.6 billion just late last week, and how their options volume hit 3x their daily average out there on Wednesday. So yeah, paper's coming in to UVXY, which is kind of interesting. We talked about it for a while. Again, it's not my favorite of the products out there. You guys know that, you've listened to the show for a while, but also in the wake of the VIX-mageddon, it's one of the last of the Mohegans out there. So if you want to play in this neck of the woods, this is where you got to hang your hat. Let's look really quickly at some single name vol. There are still some big earnings popping off. You know where to go if you want all these free reports in your hot little hands. TheOptionsInsider.com. Click on that options news and articles tab, top right corner of the homepage. That will take you to all this goodness. We got earnings move, earnings results, and earnings season reports there for you. Had some big names popping off this week. Tuesday, Twitter and Cisco and Mattel and Lyft. Wednesday, Coke, GM, Under Armour, CME. Friends across the other side of the street, they're on the river over there. And Uber. Thursday, PepsiCo and Disney. Now we got some reports here. Let's go to Kraft Heinz. They were yesterday before the bell. They were at almost $34 going into their announcement. They were pricing in 4.6%. They delivered 5.5%. So they outperformed really from a vol perspective. They're one of the few that did. Zynga was pricing in 8.9%. They delivered 4%. Let's see. PepsiCo priced in a anemic 2.1%. They delivered an even more anemic 1.1%. I think you can see where I'm going here with all this, listeners. Uber priced in 7.5% vol. They delivered 0.5%. Again, these are all done in the immediate blush after the earnings. So if you hold on to it, the frame of reference is going to change a little bit. Maybe you get some more movement. Maybe it does a little bit better. But in the initial post-earnings blush, when these reports are created, so far for the premium buyers, no bueno out there. We had Disney last night. I don't have a report on Disney. Let's see if we can pull up where they were moving, though, because that one was an interesting one. A lot of you were watching. We have the earnings move report. We don't have the results report yet for that one. They were pricing in about $10. So that's a pretty juicy. That's pretty much 2x what their previous move was. Their previous move was like $4.95, and they were pricing in about $10. They were pricing in some juice. They went into their announcements. Let's see. They were 189.63, and they are right now 188.61. So it looks like they moved a whole heck of a lot of nothing, at least net from here. They got up earlier. They were up 93, so they've been moved a bit in the after hours, giving a lot of that back now. So net seems like a lot of that juice was not merited, even though it looks like Disney Plus doing well for them. It's the only thing they have that's doing well, but it's enough to keep the stock at these astronomical levels, apparently. Interesting stuff as we keep on rolling. Let's go to a little bit of what you guys have on the brain. Let's answer some of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, first up, we got JJ08. He's talking about what we were just talking about, all these ETPs getting all this action, in particular VXX. He says, hey, guys, love the show. Thanks for everything that you do. Well, you're welcome. Thanks for writing in there, JJ08. He says, I'm having a good run with pretty tight VXX 1x2 put spreads. Obviously buying one and then selling two. Usually a half point wide, but I widen out to a full point when things are getting crazy. That seems to be the best way to pay for long premium in absurdly overpriced VXX puts without breaking the bank. Thanks again, and go Doge. Oh, he's one of the Dogecoin heads out there. Well, Jim, we were just talking about VXX. I know this is the product you watch quite a bit. One of the frequent talking points, frequent questions we get here on the show is, man, I would like to play out there, but dang, if these options aren't juicy, aren't expensive, particularly when you start looking at some of these out-of-the-money puts out there. Sounds like JJ08 is solving that problem with ratio put spreads. What are your thoughts on that, Mr. Jim?
Well, Andrew's the better option structurer on the call, but again, the great advantage with VXX, UVXY is that they are designed to go down. And so the real issue in playing that downward propensity is the implied vol and the price of the options, which can, be prohibitive. So, I mean, a 1x2 might make some sense. People need to keep in mind is that sometimes the best time to sell premium is after, people have had their faces ripped off. And what he's trying to do is sell some to buy some. And more often than not, in these guys, it's better to just be a premium seller if you can structure that in a way that you feel safe.
Mr. Rock Lobster, this is obviously a frequent talking point. We can do every show every week on the best way to structure some type of strategy to help get you into VXX. Seems like everyone's got that in the brain. I know in the past you've taken a bit of a dim view of 1x2s. We usually talk about them to the upside, though. What are your thoughts on the other way, the 1x2 put spread in VXX, sir?
I mean, it's a way to sell the vol in VXX. It's, it is a way. I think we're in a kind of we're in a unique time because normally VIX just doesn't stay at 21 forever or this level. So normally the 1x2 you put it on, you got to get run over. But that's not the case right now. Maybe I would say for the person, maybe you add that downside put at some point, just some junk put a couple points down. So at least it might be a little bit more manageable in case the vol VIX actually goes down. Nothing is indicating that it will, but sometimes you can kind of get stuck with the 1x2, and and the product it flips down a lot more than the decay would indicate. So I would just say that's a cautionary tale. I do have some students that do diagonal put trades in there. It's kind of a similar thing. So yeah, but it's a vol sale, and VXX has been very it's been very stuck, but it's like that until it's not. And then if it starts moving, remember, that the premium that's in there, if it ever decides to start to come out and, reduce a little, that future premium as a percentage of VIX is fairly high, and then all of a sudden you get some bigger moves in VXX on a percentage basis. So I would just caution somebody there. Maybe now, think about, buying a junk put or two underneath the 1x2 just in case. Generally that, like, what we do with that is you kind of estimate the theoretical decay for the week or 2 weeks, and then sort of place the 1x2 below that if there's any juice left. So it could work, but that's where I would caution where the problem could come from.
We have seen VXX move to the downside. People think they're safe there, but we did see it move about 4 points a couple of weeks ago to the downside. So if you're doing really tight ones, that's probably not bad advice to have an extra put there as a kicker to the downside in case we do get one of those 4-point moves again. You don't want to be left holding the bag. Let's see if we were all left holding the bag. It is now time to check the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Last week on the program, it was myself and the Greasy Meatball and the once and future Dr. VVIX. And let me just say, when the dust settles once again, I am standing amidst the wreckage of the other two out there. It's spikes right now at about almost a 20.97 or so, and VIX cash right around a 21.5 level. I was at a 20.25 last week, so it puts me a quarter of a point away on VIX and about 3/4 of a point away on spike. So outside of our margin of victory, which is usually 0.1. But these days, given how everyone's getting slapped in the face, it's not bad. I'll take it. And Mr. Meatball was feeling a lot lower. He got spanked 19.19 for him. Russell, in a weird turn of phrase for him. Usually he's buying all the upside in VIX he can. He was the lowest. He was at an 18. He was feeling a lot of the juice. In fact, I remember on the show, he was kind of wringing his hands over why isn't VIX lower already. He thought it would be lower sub 21 handle by even expiration this week on Wednesday. So yeah, he didn't get what he was looking for there, unfortunately. So yeah, I'm not a victory, but at least still standing out here. So that means I get to choose whether I want to go first or whether I shall go last. And you know what? I'll set the tone. I'll do that. I'll be the brave one. I will venture where others fear to tread. I'm looking at you, Mr. Rock Lobster. You hate to go first. All right. So yeah, we're at about 20.5 on the VIX cash, almost 21 in spikes. We've been talking for a while. Will it break that 20 handle? Will it break that 20 handle? Or excuse me, that 21 handle here on the show to the downside? Seems like there's a lot of paper out there leaning that way, but there has been for a while. That hasn't really done anything out there to do it. And of course, now we do have that extra factor this week of the Rock Lobster saying he took off a lot of his 21 puts, which makes me wonder if perhaps I should go a little lower. But you know what? I'm kind of, tell you what, I think I am going to do it. I am going to do it for next week. I'm going to break the 20 handle. I'm going to say 1975. So a half a point lower than where I am right now. So there we go. That sets the tone. And since, Jim, you haven't been on in a while, I will give you pride of place. You get to go next, sir. What are you feeling for this time next week?
I'm thinking 22.5.
Oh, going in the other direction. A little bit of upside. Interesting. I guess all this term structure in VIX land has you spooked, sir.
I just want to keep the streak alive.
Hey, we got to do what we got to do. All right, Mr. Rock Lobster, you got a pretty wide market for you to come drive that truck you like right through the middle of it. What are you feeling for this time next week, sir?
I have to say, I'm just going to stick with my, because it's worked so well. So I'll tell you what, the number I had actually was at the beginning of showtime. And I'm just thinking it's appropriate for what's going on in all these crazy stocks. So I'm going to say we're going to party like it's 1999 VIX, 19.99.
There you go. Shy of your 21 handle. So you actually me in the teens this time as well, listeners. I've been loath to go there, but this time I went there. So we'll see. That could be the death knell. We could be heading up to 25 again after that. We'll see. So you got Jim playing the upside card this week, 22.5. Mr. Rock Lobster coming a little bit above me there at 19.99, and myself at an excellent year of 1975. All right, everybody. Unfortunately, that music means we've come to the end of our hour-long sojourn through the world of volatility. Given everything that's going on out there, the futures, the ETPs, the options, we could spend many hours on this. We got to condense it all down into one. Alas. But before we go, let's go back around the horn. Jim, you did an able job out there in the MIAX hot seat this week. If folks are interested, they want to maybe give you a follow on Twitter or see what you guys are up to over there at TOROSO, where should they go? What should they do?
Well, they can follow me on Twitter at VIXologist, and what you see is what you get. And you can find TOROSO on the interwebs, TOROSOINV.com.
There you go, TOROSOINV.com. Check him out at VIXologist. I wonder what he tweets about on Twitter. Give him a follow and find out for yourselves. You can be like the Rock Lobster and get the latest info on fund flows into these various VIX ETPs out there. And if you want to see a lot of great tweets about stick figures and Volman and a lot of hand wringing about the 21 strike in VIX, Mr. Rock Lobster, where should they go? What should they do?
You can go to optionpit.com. You can try my shiny Vol Trade Club, Mark's Vol Edge product, both of which is having a good start to the year. So, you can come over, you can put your vol head on, and, you can actually do some mathematics and some estimating and some probability stuff to see what this vol product stuff is all about, and see if it works for you. But we got some happy people, so hey, we have some room for a few more happy people. What the heck?
And if they want to follow you on the Twitters, where should they go? What should they do?
I don't even know what I am on Twitter. I think I'm at Option Vol.
Yes.
I gotta look right now.
You are at Option Vol.
At Option Vol. That's where I am. I think Jim probably knows better than I do. So
yes, go there for all your latest on volatility-related stick figure drawings and a whole bunch more. You know where to go to learn more about spikes. MIAXoptions.com/spikes is the place to go for all the data, all the charts, all the other good stuff out there, the press releases, so when they've been doing a lot of stuff over there in MIAX land, so you can see it for yourself when the latest information breaks. Of course, even a link to a cool little show called Volatility Views. What more could you possibly ask for from a vol-oriented destination? And you also know where to go if you want to find out more about execution services and trading technology. Only one place, matrixexecutions.com. Check them out. Tell them you heard about them over here on Volatility Views. They'll be super excited. matrixexecutions.com. And on behalf of everybody over there in Matrix Land and our friend over there in MIAX Land, and of course the Rock Lobster and Mr. Jim, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions. Keep them coming, VXX and everything else. And we'll see you back next time for another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.